Hello, and welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and I'm joined as always by David Broomfield. Hello, David.
Hello, how are you doing?
I'm very well, thank you. How are you?
I'm good. It's been a busy week, and I'm excited because we've got a new thing to talk about this week.
We have, haven't we? But I think we should we just talk about what the main theme is going to be, and then we're going to come to our new spot. This week's episode is called America Sneezes, When America Sneezes, because we talk a lot about the US. I mean, we've just been talking about Jackson Hole. We've been talking about what the Fed is going to do. It does seem this is a very US-focused podcast, but there is a reason for that. And that's what we're going to explore in this week's episode, isn't it? So what are the three things that we're going to look at in this week's episode?
So we have to talk about the US, you're right, because there's going to be an election in a couple of months. But as we all know, that politics in the long run tends not to matter. But what does matter is just the sheer scale of the US in global markets, in financial markets, and in currency markets. So the three things that we should talk about are why the US is so important. And we'll talk about markets and economics. Then let's talk about that evergreen question, which I think I referenced in a previous podcast, which is about the US and China and why hasn't China overtaken the US and what those two look like compared and contrast. Mm-hmm. And then let's talk about the US dollar, because I get endless comments that the dollar is dead and it's the end of the dollar. So let's talk about that.
Okay, good. All right then. But before we come to that, I want to ask you a question. But first, we've got this new spot we're going to do where each week, one or other of us, or potentially both of us, are going to come up with a number, and we're just going to talk about that number. So, do you want to go first, or shall I go first?
I will. It's going to be a numbers round. It's going to be quick, and it's going to be relevant, hopefully, to this week. So, my number, which is, I'm already being naughty, and it's only week one. My number's a fraction. It's 1 in 12.
Okay.
1 in 12. Okay, if we want it as a number, it's just over 8%. Okay. So 1 in 12 is the number of copper atoms in the world that come out of one mine in Chile.
Wow. Okay.
So 1 out of 12 copper atoms on the entire planet come out of one massive hole in Chile, and it's called the Escondida mine. Okay. And now this mine's been running for about 100 years. It's where Thomas Edison, over 100 years, it's where Thomas Edison got his copper from.
Really?
And the reason I'm bringing up copper this week is you've seen some huge price moves in copper downwards. And, some of the investment banks are now forecasting that copper will come in at around $10,000 a ton. So that's down about $5,000 a ton from the expected value not that long ago. And this is all about China's demand, et cetera, et cetera. But I thought that number was just amazing, that we have this one mine on the planet that is the source of 1 out of 12 copper atoms. And here's a follow-up fact. There's now more copper underneath Cornwall than there is in this mine in Chile. Cornwall, if any listeners happen to be living there, there's literally gold under your feet.
So not only is it great for surfing, it's also great for copper as well.
It's great for copper. Obviously, over the last 100 years, we've got incredibly efficient now at mining copper. So the concentration of copper in this mine in Chile is actually lower than the concentration in Cornwall.
Okay. Fascinating. Well, I've got a number for you.
So what's your number, Sarah?
My number is 2,492. Now, it's got nothing to do with this week's topic, but it is related to a topic we're going to be covering in the not too distant future in one of our special episodes. And it is the size of a diamond that was recently discovered in Botswana. It is the second largest diamond in the world. So 2,492 carats. Do you know how long ago the largest diamond was discovered? What's the gap between discovering the largest one and the second largest one? Any ideas? Do you want to take a guess?
I mean, I'm going to take a sab in the dark. That is the largest one, the Cullinan diamond, previously.
Spot on. Absolutely.
So I'm going to go and guess that was around turn of the century. I'm going to say around 1900.
I think if I remember correctly, it was around 1905. Fascinating fact about the Cullinan diamond. That was 3,106 carats. And of course, obviously, 2 parts of the Cullinan diamond are used in the crown jewels. So it was cut into 9 smaller stones. do you know how it took them? It took 3 men working 14 hours a day over 8 months to cut and polish 9 stones that came from the Cullinan diamond.
Wow. I think there's a story about how that was transported back to Europe with a huge amount of decoy and subterfuge. So we won't discuss that here, but I'm sure it's a fascinating read for anyone that's interested.
But we will be coming back to the subject of diamonds in a future episode. So it might seem a bit left of field, but we are going to be talking about diamonds because we've got our own resident diamond expert. So watch out for that for a future episode. Okay, so let's come back to the main topic, the US, and why we spend so much time talking about the US. But before we get to that, I've got another question for you. So there's a phrase that's used a lot when America sneezes, the rest of the world catches a cold. Do you know from where that expression originates?
Wow, it feels like one of those timeless, it feels like that phrase has been around forever. I'll have a stab in the dark again, a wild stab in the dark. I'm 20th century politician.
No, much older than that, because it was first used about France.
Wow.
So it's during the Napoleonic era. You're getting an extra bit of history with this podcast this week. It was first used by a Prussian diplomat, Clemens Wenzel Fürst von Metternich.
Excellent.
During the Napoleonic era, and he was actually talking about France's relationship to Europe. So fast forward, and we're now talking about America's relationship to the rest of the world, particularly global markets. So I guess that brings us to the first topic, which is, why is the US economy so important for the global macroeconomic backdrop?
It is the most important economy, I would say. But before we get into the details and the features of it, let's just look at the historical context, because it wasn't always that way. I mean, listeners can go back if they want and look at an incredible data set, I think, by Angus Madison, that looks at almost biblical history to illustrate how economies have risen and fallen over the centuries.
And we've only got half an hour, David.
But we've only got half an hour, so we'll look at very much the contemporary history of the United States, which is about the decline of the British Empire. Okay, yeah. So this was all about after World War II, where the US emerged as that dominant global power. The British Empire was weakened economically and politically, and then the Marshall Plan, of course, established in Europe, put the US as a central economic force, aiding European recovery, and really cementing at that point, well, it certainly laid the foundation for its role in global finance and its global financial influence. And then what came around there at that same time is obviously Bretton Woods. We've discussed that previously on the podcast, and that in parallel established the US dollar as the world's reserve currency, and that further solidified the economic dominance. But we can throw stats about how big the US is, but I think let's just talk a bit about the features of the economy, because it's really unique, I would say, or certainly blessed with the abundance of human capital and natural resources. Yeah. Okay, so historically, this idea of manifest destiny, this huge immigration story, has attracted top talent to the US. I mean, it's globally sucked in top talent from numerous nations, especially in the fields of science, technology, engineering. I mean, you look at the Silicon Valley tech boom, immigrant entrepreneurs founded over 50% of US billion-dollar startups, right? So it's an incredible story, which just punctuates so markedly these current debates about immigration in the US. I mean, this is the reason the US has been so successful. Okay, so you've had this human capital element, but then you've had natural resources as well. It's incredibly rich in oil. It's now energy independent, which again we've talked about on the podcast. It's now one of the largest oil producers. It's bigger than Saudi Arabia. It's massive. It's massive. So those minerals, those resources. I mean, you've had little booms over the years. You've had the Texas oil boom, obviously, but that's part of this tapestry of just a continental-sized economy. So think of the economy on the one hand, but then you've got the market on the other. The market dynamics, I think, are really interesting as well. the US stock market is by far the most liquid market in the world. Okay, it's about 40% of global equity market capitalization.
Yeah,
it's obviously the largest debt market. The treasury market dwarfs the equity markets, and US markets have shown huge resilience against all of those economic crises that we've lived through in recent times: 2008 financial crisis and the recovery, the COVID-19 pandemic. And the paradox of the US is that even when things are in crisis, the US market tends to be the most resilient. And what's more, even if it's the US in crisis, the US market seems to be the most resilient.
Why is the US market considered to be the sort of least or most frictionless market to trade? Is it just because of its size and its popularity and its dominance in global markets that makes it the easiest to trade?
Yes is a short answer. A slightly longer answer is, you don't have things like stamp duty. You have a huge depth to the market at all levels as well. So you've got the brute force capitalization of the market, so the size of the market, but then you've also got the volume that's traded on the market, which just dwarfs any other regional market. So what that means in reality is that even if you're Warren Buffett or a sovereign wealth fund, you can trade large blocks of US securities relatively friction free. So that's quite attractive to anyone that's an institutional manager, right? Because you've got that surety that the price you get when you want to sell or buy is probably the price that's in the market. That point on markets and capitalization, I can't understate it. I mean, you've got the world's most significant dynamic companies hosted there, the tech giants. Okay, I won't name them. We all know who they are. And Apple factually became the first company ever to reach a 3 trillion market cap a couple of years ago, 2022. Yeah. So you've got just this market that stands and dwarfs all others. And the cultural influence of that as well can't be understated, which is why that expression that you punctuated this section with is still relevant today, even if it is now about America, not France.
Yeah. Okay. So it's got this tremendous wealth of human and natural resources. It's this huge market which is incredibly liquid, incredibly easy to trade. It's home to some of the biggest, most significant companies in the world. And on the subject of the size of company, I noticed that I think Berkshire Hathaway have just become a $1 trillion company, and they're the first non-tech company to breach that sort of mythical not mythical barrier, it's actually an actual barrier, but they're the first non-tech company. So it just gives you a sense of the size. Is the US economy, because we're going to talk in a minute about comparing it to China, is it the biggest, most important economy by any measurement? Or if you compare, are some things it's bigger than, I mean, if we assume that China is its next rival, based on size and GDP and everything, is it bigger than China on every measurement? Or are there some things where China actually has kind of nudged into world leader role over the US?
Let me make the comparison with China in just a moment. I think the first point, which we shouldn't gloss over, is that in the US, your ability to convert or translate, maybe transmute, I don't know what the word is, GDP growth into equity returns is extremely efficient compared to other countries. Okay, so if you look at America's growth over the last decade, and you look at its annualized GDP growth, let's say for the sake of argument, it's around 3%. We can fact check that. You'll find that the S&P 500 has probably returned around 8% annualized over that same period. As I said, we'll have to fact check these numbers, but my point is that GDP growth is exceptionally or efficiently translated into equity type returns. So as the whole economy gets wealthier, shareholders get rewarded. And that's quite different if you do that same statistical exercise in other countries. Not all countries, but some countries.
Why is that? Why in America does it seem to work so efficiently?
Well, there is a long-standing corporate culture of returning value to shareholders. Calvin Coolidge said, America's business is doing business, or words to that effect. I think the actual quote was, America's business is business. I can't recall. But the point is that you've got this alignment of interests that allow shareholders to be ultimately rewarded. Now, if you did that comparison with China, you would see almost the inverse. You would see economic growth numbers that were, okay, let's believe the official statistics. Let's say they're almost double digits. Let's say 9% economic growth, annualized GDP growth per year. But the market's returned probably 2 to 3%, the CSI 300 over that period. So, there is a good World Bank report on the ease of doing business in different countries, which talks about the ability to enforce a contract and et cetera, incorporate a business, declare a bankruptcy, file a tax return. And, America scores obviously exceptionally highly in those reports. So this, there's a corporate culture, I think, of rewarding shareholders.
Okay. So we've got, these are sort of, again, another element then that contributes to the US economy, why it's so important, not just so important for the global macroeconomic backdrop, but why it's the most important for the global macroeconomic backdrop. So then I guess turning then to China, why has China, because there's been predictions that China will overtake the US as the biggest economy in the world, I don't know, at least 10 years, as far as I can remember. Why has that not happened yet?
Yeah, so I think I've talked about this again on a previous podcast, but this is, I think, super interesting. So let's just dwell on it for a second. So it does depend very much how you measure things. So if you measure GDP using US dollars, then, China has, not overtaken the US. And probably won't do for some time. Okay. Now, but economists love using exchange rates and dollars to measure things, but exchange rates fluctuate and they don't tell the whole story. So if you look at different measures of GDP, if you look at it on a purchasing power parity or a PPP basis, then China has actually surpassed the US. Okay. So, but it still remains behind on this nominal GDP figure. So this US dollar figure. But, and this is what I think is interesting, if you actually look at electricity consumption, now there are general stable relationships between, as countries industrialize and get more wealthy, how much electricity they consume. And also, yes, we have to acknowledge that China is very much sort of the workhouse of the world, of the factory of the world. But, that story is probably not as pronounced today as what it was 10, 15 years ago. Much of that heavy manufacturing has left China, or some of it has certainly, and gone to other countries like Bangladesh, India, and Southeast Asia. So you've got this giant figure when it comes to electricity consumption in China. It's almost double the electricity consumption of the US. Okay. So, if I'm just comparing two economies and their raw economic output or productive output, China looks bigger than the US. It's got a bigger internal market than the US. Yeah. But if you look at it on a per capita income basis, so, if you divide GDP by the number of people in the country, it's still significantly lower. So the living standards are lower than the US, but the economy as a raw economic entity is probably bigger than the US. So again, it depends how you measure it. If you use dollars, you get one answer. If you use PPP, you get another answer. If you use electricity consumption, you get another answer still.
I guess a big challenge for people looking to invest. So investing in America is a very straightforward thing to do. Anyone can do it in whatever form you want to do. Investing in China, so direct or foreign investment, is challenging, isn't it? And that's got to be something that's holding them back a little bit, maybe?
Yes, it's very challenging. The market isn't quite as accessible as you might think, and many shares have dual listings in China or in Hong Kong or on different exchanges. So you also have different players in the market as well. You have the government buying and selling equities in a kind of stabilization role. And then you have big retail flows as well into the market. But the point on the domestic market, I think, is the most interesting one, because China's domestic market is potentially massive, both in terms of its consumer base or even investor base. But neither have really been activated, if that's the right term.
Yeah.
And, the Chinese economic growth model has been based around property for many, many years, and huge amounts of lending by the banking sector to allow that to happen. And so you've got this idea that, first of all, from almost a retail perspective, the Chinese don't like investing in their own stock market. And that is very contrasted to America, where through people's 401ks, and disintermediation, the US has almost led the way in the world, providing its people with direct access to its companies and to invest in them.
I was going to say, actually, is that there's probably a stronger culture, probably a better developed and more mature culture in the US of investing in your own stock market and your own companies than perhaps there is in China.
Yeah, there is as well. And also the companies that are listed in China, obviously there are some great companies, but if you step back and look at the big picture, despite the rapid growth in China, it's still lagging the US in many of those high-end technology, innovation and R&D areas. If you look at spending on that kind of R&D as a percentage of GDP, it is lagging the US. I mean, okay, China is massive, but still the absolute numbers are big, but as a percentage of GDP, it's still smaller than the US. And the US is leading the way in many advanced fields, like AI being the most contemporary and talked about one recently. And advanced chip manufacturing, which we've talked about on the podcast before, is now starting to pivot into other countries. So the companies that are listed there are not necessarily a good representation of China as a whole. The liquidity is problematic, and you have the different actors in the market creating different market dynamics than what you do in the United States. So I'm going to add one more, I suppose, statement to all of this, which is there's a lingering concern about geopolitics when it comes to investing in China. The idea that the legal system perhaps might not afford you the same kind of protection as it would, say, in the United States.
Yeah.
And that's not just like buying shares and equities and things like that. But, if you're thinking of building a factory or actually doing some foreign direct investment, building a big long-term piece of infrastructure perhaps in China, then I think there's obviously that lingering geopolitical question.
Okay, so on some measures, China is already bigger than the US. However, there are some challenges. As you say, there's not a strong culture of the domestic population investing in their own companies as there is in the US. It can be quite challenging to invest in China, whether that's investing direct foreign investment or whether that's in buying stocks and shares in Chinese companies. There are some question marks about perhaps some of the governance. I guess if we're being completely honest, I think we're being completely honest, and it perhaps lacks the ease of trading that you see with US markets. So that would suggest that those things probably need to change before China can overtake America. Do we see that happening? Could we see in 10 or 20 years' time? I mean, people have been predicting this for at least 10 years. So maybe another 10 years, we'll still be having this conversation. I don't know. But could we see a point, a lot, I guess, has to change in China before it will really overtake the US as the most important economy for the global markets?
Yeah, this is the growth conundrum for China. And creating a middle-class consumer and investor in China has been talked about since I first came into this industry. This was going to be the future. There was going to be this huge wave of Chinese middle class that were going to be investing in their own market and internationally. and consuming, and comparisons were made with the US consumer and how that transitioned in the 1950s. I am doubtful that anything will change soon. Because there is a political dimension to this, to create that similar kind of middle class as you do in the US, for instance, gives up a certain degree of political control. So I'm not sure we can expect that anytime soon. And I'll go out way on a limb and say, in my professional career, what remains of it, hopefully many more years, I don't think the US will be anything other than dominant in global capital markets. I can't see that. I mean, it took a huge world war and a sequence of geopolitical shocks that were just enormous to create this situation. It's difficult to see how, without something similar happening, we can disentangle it. And remember, the idea, here, is that the US markets aren't the US economy, right? It's more of a concept. It's more of a system, and it's a system which happens to be administered and governed by the US, but it's not really a reflection of Main Street USA.
I was going to say, this is the Main Street versus Wall Street sort of dilemma, isn't it?
Yeah, and it's a system that everyone buys into. And remember, when we talk about currency, which we will soon, everyone out there is effectively acting willingly as a proxy for the Fed. And we'll come on to that when we talk about the dollar.
Okay, well, let's talk about the dollar then. So the US dollar is still the world's reserve currency. It's traditionally the safe haven currency that people go to in times of trouble, even, as you say, probably when that trouble is in the US, it's still the safe haven currency. Well, I guess it's all tied up with the fact that a lot of commodities are traded in dollars. Is that why? I mean, and again, like China being the number one economy in the world, de-dollarization has been something that's been predicted for a long time and has never arrived. Why? Why not? Why are we still talking about the US dollar?
Well, I love the conspiracy theorists that predict the end of the US dollar. Anyone that spent any time in like financial plumbing or currency markets will just realize just how fanciful and far-fetched that idea is. I mean, since the 1970s, oil has been traded in dollars, and I think that's the origin of the conspiracy theory that without that Saudi-US agreement in 74, I think, that we would never have this dollar dominated system. And the reason I don't buy it is this point I made about the willingness of central banks. There are deep dollar swap lines. The ability of basically a bank in the United Kingdom, in the Eurozone, or in Japan, or in Canada to print US dollars, they've effectively got a blank check. If they need to, that's me simplifying how this swap system works. The point is there is an unlimited supply of dollars that any central bank can access. And the dollar has historically, as I think I mentioned last week, been quite a weak currency, and global reserve currencies need to be freely exchangeable in a frictionless way, completely abundant without question, and generally weak currencies. And the dollar has fulfilled all of those. I mean, flip it on its head. Where would oil producing nations today or commodity producing nations today put their earnings? Would they put them in Chinese yuan, or would they put them in some other currency? I mean, by the way, for those who don't know, the Chinese currency, the renminbi, it is not freely tradable. It's not freely convertible. There are capital controls. So, a petro yuan or petro rupee fails on all of the measures of a global reserve currency. They're simply not viable if you are a commodity producing country. And also, remember my point about proxies for the Fed. If you look through the headlines, you'll see that some of those stories about currency deals, bilateral deals going on between commodity producing nations and nations like Russia, for example, that are outside of the dollar system, are simply to avoid the sanctions that are on Russia. So the UAE dirham has been used exactly that way to settle some oil transactions with Russia. But the irony here is the dirham has been pegged to the dollar for 25 years, and it's basically a proxy for the dollar.
Yeah.
So I don't think anything is going to change soon. So the context here, listeners, is that 60% of global currency reserves are in dollars. And although that number has fallen a little bit over the last decade, it's fallen at the expense of other currencies, which are basically dollar proxies, the Canadian dollar, etc.
Okay, so my question is, because we talked about the importance of the petrodollar and oil is traded in dollars, we are meant to be in a world where we're moving away from fossil fuels. As we move away from oil, surely that will introduce perhaps the decline in the dollar. Because we won't need dollars so much, because we're not buying oil, we're using wind power, we're using solar power, we're using alternative, electric cars, whatever. We don't need to buy so much oil, therefore we don't need so many dollars.
No, there'll be other commodities. Every commodity is effectively dollar price, right? Oil is just one of them, and there's a substitution effect. Like energy needs to be created from something, and that commodity is probably priced in dollars. And remember, that idea that it's only because raw commodities are denominated in dollars that we have this dollar system. Current countries left to their own devices will freely trade in dollars for those points I made. It's convertible and it's freely transferable without capital controls. For instance, Poland and Hungary often traded with each other in US dollars, not the euro.
Okay.
Right. So it's, as I said, countries left to their own devices. If you go and look at direction and trade statistics, you'll see like there's big bilateral deals that happen in dollars between euro-denominated countries. So it's about this idea of a system and a fully integrated system that's without capital controls, freely transferable. And if you find me a currency that can fulfill those criteria, then there's the possibility. Now, there's been lots of discussion for over a decade now that will cryptocurrencies do this?
Yeah.
The short answer, I think, is no. Because, again, it is actually quite complex transacting them. And I think when you consider the volume of transactions that happen on foreign exchange markets in the order of magnitude of around, I think, $7 trillion worth a day, to try and settle all of that using blockchain and cryptocurrencies with all the associated power usage and the transaction time, it's quite cumbersome system compared to the existing system.
And also still very volatile as well, cryptocurrencies, aren't they?
Extremely volatile. We have this evergreen debate. Well, it's not a debate in my mind, but in many commentators' minds, this idea of, is it a currency or is it a commodity? Or is it even a store of value? And it's not a viable alternative. And also it's being increasingly regulated, and you've got central bank digital currencies potentially challenging some of that dollar dominance, but the US is actually putting itself front and center to globally legislate this system. And I don't think that's any coincidence.
Okay. I did see some, I guess before I get to my little stat that I found, which is quite out of date, but it's the most recent one I could find, was then, are we saying then that the dominance of the US economy and the dominance of the US dollar are kind of hand in hand? And if one declines, the other declines, or they're kind of independent of each other?
I think they're independent of each other. Okay. And I mean, the US is an incredibly rich country that will remain rich. It's not going to change overnight. And remember, you need to kind of separate these things, and they are interlinked, but they are separate concepts. The concept of Main Street USA, of global capital markets, equity markets and treasury markets, and then the dollar.
Yeah.
And they are all interlinked, but they are separate concepts. The system is separate, I think, to the economics.
Yeah.
And obviously the market is a function of the economics, but the two are systems. So I don't think the US, even as an economic power, is in decline. But even if it were, I wouldn't be losing faith in the dollar.
So we're not about to stop talking about the US from a global macroeconomic backdrop point of view, because it is the biggest economy by most measurements. I mean, you could argue there's a few kind of slightly more esoteric ways you could look at it and argue that China's bigger. But the fact is, from an investor's point of view, the US economy is the most important one. And I did see the only figures I could find for 2016, I'm sure it's probably not different, but I don't know how much different it would be, that the US is still the leading supplier of bonds and equities. In 2016, it was 43% and 39% respectively. I imagine the figures are not hugely different to that. Correct me if I'm wrong. But for that reason, and tied up with that, the importance of the US dollar, we're going to keep talking about the US.
I've been thinking about your question about separating the system from the economy. And I wonder, there is one, I'll give you a hypothetical of what could happen. And I'm really clear that this is a thought experiment more than a reality. If you're a statistician, you'd say it's a tail risk. Okay, it's something that's very unlikely. But if you saw geopolitical tensions globally rise to such an extent that you had this kind of this fissure develop between, let's say, NATO countries and non-NATO countries, or I don't want to say east-west, that's too reductive. But you can see there's two different power axes here. And with that has the potential of two different systems. And those axes in their own right, you would have, I don't know, Europe, Japan and America on one side, and then you might have Russia, maybe China, maybe parts of the Middle East on the other side. You could have these two giant power blocks, and then you can raise some questions about the dollar as a global currency, or maybe there'd be a different currency for this network and a different and the dollar for this network. So there are ways but I'm now listeners straying into the world of sort of science fiction. I mean, I can probably write the novel, but I think the reality is incredibly low probability.
That's definitely, we're definitely not into science fiction and need to know. We're about facts as much as we can be about facts.
Exactly.
Okay, and we're going to be revisiting this topic because obviously, as you say, we said at the very beginning, we've got an election in November, which, the world will be watching to see what happens and see how that plays out in markets. So we will be coming back to this subject, the importance of the US economy and how it's viewed from a sort of an asset manager's point of view, and also the potential impact of whatever the result might be. We're definitely going to be coming back to this subject. Thank you very much, David. A reminder that the views expressed in this podcast are not intended to constitute investment advice, are accurate at the time of recording, and are subject to change. Thank you for listening. Make sure you don't miss an episode. Subscribe to Need to Know via wherever you get your podcasts. You'll find previous episodes, including last week's, where David and I had a chat about Jackson Hole, the history, the importance of it, what we learned from it, and a little bit of a challenge from David on just how important are central bankers and how much do they influence the world economy. A bit of not super controversial, but a little bit of a challenge. Until next time on Need to Know, bye for now.